Hi guys, this is Tim from TradingStrategyGuides.com. This is just a quick, unscheduled video to answer a question from a comment on Wednesday's RSI video. Sometimes a few minutes of video will save a whole bunch of words. Anyway, this question is from Chickadee Yunko. I hope I pronounced that right. Hey Tim, I have a silly question. How are higher high, higher low, and lower low, lower high defined? Is it only comparing the last high or low to each other on the tape? And thanks for the compliment on the RSI video. Chickadee, this is a great question. What Chickadee is asking is how to identify a trend using the price structure of higher highs and higher lows for an uptrend or lower lows and lower highs for a downtrend. Identifying any sort of chart pattern is very subjective. It depends a lot on the candles surrounding the pattern as well as confirming information like volume and volatility. And I use those a lot in my trade picks videos, so you guys can see a lot of examples of that. For starters, since we're trying to identify a trend, we're not going to find the structure in a congestion or consolidation. Congestions are just sort of mishmash and don't follow the rules, or I guess I should say they follow their own rules. Consolidations typically form organized patterns like triangles, trading ranges, flags, and so on. If you follow my Trading Picks videos, you'll know that I trade breakouts of consolidations like this. Just remember that identifying price action is very subjective. What I see may not be the same thing that you see. So the Aussie-US dollar cooperated nicely today on the daily chart and has examples of each situation. For starters, here's an example of congestion. That's what I call sideways price movement that doesn't have any rhyme or reason. It's got a nice support level right here, but it's not forming any meaningful patterns. It's just going sideways. So I just kind of gloss right over these when I see them. I just don't see any trade opportunities on this. Now this is an example of a consolidation, and this is the sort of thing I look for to trade. In this case, this is a descending triangle. Volume has dropped off, volatility has dropped off while this is forming. It's still going sideways. I would not take a trade inside this pattern, but once it breaks out of this pattern, I would be right on this one. So don't look for higher highs and higher lows or lower lows and lower highs in either of these situations. This, however, is an example of an uptrending market. You can see it made a swing high, made another swing high that was the same, at least not lower. The next swing high was higher. The next swing high was higher. Next one's higher. Next one's higher. Next one's higher, and so on. The swing lows. This one is higher. This is higher. 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 Now this one is lower, but then it continues on with its higher lows. Now this situation here, as you can see, I mean in hindsight, we can see that it went into a consolidation shortly after this. But if you had seen this live, you might want to start thinking that the trend is weakening and may turn into a consolidation at some point. It's also possible that if you were to zoom up to the weekly chart in this case, it would give you some insight on this. I'm going to drop a couple of vertical lines here so we know exactly where this trend is. And let's go up to the weekly chart. Now you can see on the weekly chart here that the swing low does show up. So I would consider this a little bit more serious. But a lot of times when you have a swing low that goes lower than a prior swing low, when you zoom up to the higher time frame, it just doesn't show up. So going back to the daily chart, the point is look for the swing highs in the chart and compare them to the prior swing highs. And a good way to define this would be the highest candle in a group of 5, highest candle in a group of 5, highest candle in a group of 5, and so on. Then of course the lowest candle in a group of 5, and so on. One thing I want to say, with all that said, don't get an ulcer over any of this. Look at the price structure, make a decision about it, and move on. If you're wrong, then shut down the trade and look for the next opportunity. Yeah, I ate a lot of antacids worrying about this stuff in my earlier career. It's just not worth it. And of course, the more you do it, the better you'll get at it. Now, I know with Elliott Wave, you're looking for trends within trends, waves within waves, and so on and so forth. So this is probably a little bit more important, but I think maybe the answer to your question is to look for the fractal points, and a fractal point would be the highest candle of 5, the 2 candles on either side of it being lower, or the lowest candle of 5, the lowest candle with 2 candles on either side being higher might help you to define these points. Chickadee, I hope this answered your question. Hope everybody has a great weekend, and I'll see you Monday.